Here's Wealthy's quick guide where we answer 5 of the most common questions on how Budget 2025 affects you as a taxpayer. Number 1, the new tax changes. If you're in the old tax regime, there's no change. But under the new tax regime, you won't have to pay any tax if you earn a salaried income up to 12 lakh rupees. You get a full rebate and you also benefit from a standard deduction of 75,000 rupees. This is how the finance minister explained it.
That there will be no income tax payable up to income of 12 lakh rupees.
Number 2, but what is a rebate? This is basically like a discount or a cashback on your taxes. So if you earn less than 12 lakh rupees, the government will reduce whatever taxes you owe when you file your tax returns, and this brings your tax liability to zero. It's only if you earn more than 12 lakh rupees that the slabs kick in and you get taxed. For example, assume you earn 14 lakh rupees in salaried income. As per the new tax slabs, you first get a standard deduction of 75,000 rupees and your taxable income directly falls to 13.25 lakh rupees. But you don't get any rebate, and this then gets split among the various tax slabs, so you end up paying 78,750 rupees in taxes. Number 3, the concept of marginal tax relief. People earning just over 12 lakh rupees also benefit from something called the marginal tax relief. It is available for those whose income is between 12 lakh rupees and 12.75 lakh rupees. For example, someone with a taxable salary of 12.1 lakh rupees would normally have to pay 61,500 in taxes based on the tax slabs. That seems unfair, right? Especially since you would have paid nothing if your income was just a little lower at 12 lakhs. So marginal relief ensures that only the excess over this 12 lakhs, which is 10,000 rupees, gets paid as tax. And this marginal relief is available for incomes up to 12.75 lakh rupees. After that, no relief applies and the tax slabs kick in. Number 4, what if you have capital gains on selling stocks and mutual funds? The rebates we talked about don't cover any income from capital gains. That's taxed at special rates like 12.5% for long-term gains and 20% for short-term. This is for equity, of course. The most important question, number 5, which is better, the old or new tax regime? Now, EY has a simple thumb rule. If your income is over 24 lakh rupees, the new regime is better only if your deductions and exemptions such as HRA, ATC, ATD are under 8 lakh rupees. Otherwise, you'll be better off sticking to the old tax regime. And remember, there's also a default regime. So if you don't explicitly choose your tax regime, the new one automatically applies to you as the default option. And if you want to benefit from any of the rebates or exemptions, filing your ITR is absolutely necessary.